supposed to introduce you David Galbraith, a partner at VC firm Anthemis, which specializes in fintech investment. We've only got 14 minutes to head into the storm of what's going on in fintech and investing in that space right at the moment. We've just been competing with the PM of Poland, so the crowd is slim here, but I hear people will be listening online. So David, before we crack into the substance of our chat, tell us a little bit, for those who don't know you, a little bit about your background, how you ended up in fintech technology, because you entered via an interesting pathway, via a background in architecture, right? So just give us a brief overview.
So by mistake. So I was an architect. I worked for Norman Foster, and ended up. My dad was a physicist, and I always knew how to program. And so as we did more and more complex designs, I ended up programming, became an internet entrepreneur. And as you get older, a bit like runners who do longer and longer distances, you end up becoming a VC. So that's what I ended up becoming.
But you spent some time in what I would describe as the early internet. Tell us a little bit about what you were doing back in those days.
So the internet in sort of 96, I guess, around then, when I remember people... I guess the internet seemed like a very trivial thing then. I mean, a lot of us believed that it was important, but now it's systemically important, and that was really impossible to think back in sort of 96, just because there were so few people on the internet.
And of course, you had direct experience with helping to develop things like Yelp. And what other sort of things are on your calling card?
RSS.
RSS, of course, which I still use.
It's kind of dead now, RSS, but yeah.
But it was big in its day.
Yeah, it was a good learning point about protocols and what's happening with crypto, because it was a very simple, open protocol.
Right. So let's get into the substance of this conversation. We're kind of... I guess observers might say that fintech is facing a bit of a challenge at the moment, as is the wider market space. But David, do you think, how would you gauge what's going on in the fintech space right now, but also in markets? Do you see this as a critical crisis or a broader one?
Look, central banks printed lots of virtual currency, and people started buying pictures of bored apes with these things. So things got crazy, and they're correcting now. I was in San Francisco during the dot-com crash. I then moved to New York, and I lived there when there was the 2008 crash. We're seeing something that's probably not as severe as the dot-com crash, and it's a little bit like that. It's certainly centered on tech, but it's also possibly it's not systemic in terms of the broader economy, but it will leak into the broader economy, because there are just so many disruptions happening at the same time.
But do you see this as indicative of a broader sort of paradigm shift? What's your view on that?
Yeah, so I mean, we chatted about what we're going to say today, and really saying, look, what's happening is a once-in-500-year event. That is not what's happening in terms of this particular market correction. This is a symptom, in the same way that the Ukraine war is actually a symptom, not a cause, and the same way that the pandemic is actually a symptom, not a cause, of broader structural changes, and these things will happen again and again, and unless we acknowledge them, we're in very, very big trouble.
How do you diagnose those symptoms? I mean, what exactly is happening here?
So the last time the flows of information and capital changed this much was the pre-Reformation, when there was a discovery of the New World and the printing press was invented. And those two things transformed everything. They changed medieval guilds and trade fairs to joint stock corporations and capital markets, and they created 100 years of war. And they changed the way that human beings interacted with each other, triggered the Reformation, and then later arguably triggered some of the things that caused the Enlightenment and then the Industrial Revolution. We're at one of those points in history, because the rise of Southeast Asia and China in particular, and the internet are exactly analogous to the discovery of the New World and the printing press.
And I mean, obviously, very often when you're in these pivotal transformation inflections, you don't necessarily recognize it at the time. I think when you look through history, people, when you look at the diaries of people living through these eras, they didn't realize they were living through these, hugely important transformations. What gives us a clue today that this is happening? And perhaps,
Well, just the sort of denial. You're seeing both like central banks trying to play the same game that they've played historically and being like rabbits in headlights, just not knowing what to do. I think they will fail as catastrophically as they did through secular deflation, as they will through now what looks like it may not be transitory inflation. And then secondly, looking at economies such as the German and French economies, which were perfectly tuned to the industrial age, and they're completely in denial. And all the German and French economies are doing now is holding back Europe by over-regulating to try and pull it back into the industrial age when they need to push forward.
And how do you push forward in this context? You talk about, the emergence of an internet of energy. What do you mean by that?
So that's a third thing. Frankly, we've got enough change that's happening through changes to trade, i.e. capital and information. Last time that happened, as I say, was pre-Reformation, and it was much, much later that there was a change to energy flows, which created the Industrial Revolution, mechanizing things. This time round, it's possible there are some structural changes to energy. We're seeing a massive shift towards mobile electricity, for want of a better word, which changes makes the electricity grid much more internet-like and could trigger sort of similar dynamics to the way energy works. But that doesn't need to happen yet, and probably won't. What's important now is the changes to information and capital flows.
And who do you think gets it? Like, who sees the transformation for what it is versus those who are maybe still in denial?
So I mean, talking my own book, I will say that, look, venture capital was a tiny asset class within a small asset class. So it's a relatively unimportant point of asset management. And yet, most of the world's post-industrial economies, post-industrial businesses have been created through venture capital. So this tiny thing transformed the world. We're going to see a massive pullback to venture capital in the short term, but longer term, we're going to see this model of investing with shared upside as being a way to create transformative change.
I think this is a good moment to ask your opinion about Web3, because there's a big sort of debate out there whether or not Web3 is fundamentally contradictory to venture capital as a concept. And if we're moving in this Web3 direction, is this a bit of hot air, this Web3 phenomenon? Is it going to disrupt VC? What do you think?
So, 90% of crypto is crap, but 10% will change the world. Well, maybe less than 10%. Ethereum is clearly the most important thing since the web. To call it Web3 is a misnomer because these things are not web protocols. So Web3 is actually internet something. But if you like, the first phase of the web was all about browsing. The second phase of the web was social media and publishing. So it was read and then read-write. If you think of operating systems like Unix, every file has read, write, or execute. What's happening now with Web3 is the transactional component of the infrastructure is being put in place. So it's the read, write, execute web.
Obviously, you can draw on your background as an architect when you look at these systems and how they emerge. Is there a lot of crossover? Do you think that the current sort of engineer architects, do they need to learn from the world of bricks and mortar in this space, or is it totally different?
So when you design a building or a table, you design it and it's static, you draw it and it stays there. Businesses are like living things. They have inputs and outputs. They're more like whirlpools, if you like. They're not static objects that have coordinates. And so they're very, very different things. And I think the types of people, the types of designers that can look at these broader systems are the types of, they don't come from traditional design. They come more from, let's say, town planning or people who look at complex adaptive systems.
Do you think that constrains the vision in some way? And especially as we approach this new paradigm shift, do we have to think about systems architecture in a totally different way?
Yeah, we need to think about how to keep things healthy. We know the global system, the planet, has been destabilized by us, is an existential threat. And so not only has the planet been destabilized, but we're now going through this structural change where all of our organizations, our industrial age organizations, they need to be slightly different. They were slightly different as we moved from medieval guilds to joint stock corporations. Modern corporations are going to need to have a lot more shared equity. They're going to need to have be much more resilient, actually. And we're seeing some of the real downfalls of over-efficiency at the moment.
Do you think Web3 has any role to play in that sort of future?
Look, I mean, these are buzzwords. Web3, there are certain buzzwords like IoT or cloud or Web3. They're broad enough that they don't really mean much, which means if you're in a big corporation, you don't get fired for saying it. So they don't actually mean very much, except for this structural change in Web3, which is the fact that our infrastructure is transactional, which means we've commoditized all of the world's transactions. And at the point where the internet was based upon, everybody thinks of tech investment as investing in technology. It's not. It's investing in the capabilities. Whoops, it's gone off. It's investing in the capabilities.
Try again. Is it on? Is it on now?
Never mind.
We've lost the mic. No, I think take my. I'll save the day.
Okay.
Here we go.
Thank you. So it's about where was I? Investing in. People talk about technology investment as tech investment. It's not. It's about investing in the things you can do with the internet. And the things you can do with the internet are actually when you commoditize all the technology. Most internet companies are built on open source software, open protocols, and a free infrastructure. What we're seeing now is that free infrastructure is being put in place for all of financial services.
So this is a good example of like when technology lets you down and you have to innovate, with the power of human analog creativity. Do you think that we are also, is it working now?
I think it worked, yeah.
Oh, excellent, I can sit down now. In terms of you mentioned the global instability, right? To what degree has technology and these systems played a role in creating that polarization perhaps? And can we overcome some of these challenges with technology alone, or do we have to bring back a bit of resilience and friction into the equation?
So the big change, and the thing I wanted to talk about is we're seeing the internet and trade from China increased the efficiency of flows. We're now seeing the reaction against that. And so we're seeing, so nationalism is exactly the same as, let's say, identity culture wars on Twitter. These are natural points of friction that are emerging as every action has an equal and opposite reaction. We're seeing the reaction from nationalism against globalization, and then on the internet we're seeing misinformation and noise in the efficient flow of information. These are natural occurrences, but as we go through this period of change, we're going to see everything reverse. That in terms of, let's say, we saw a period of secular deflation. We will see secular inflation now until we reach this Goldilocks, well-balanced network that happened last time, as I say, after 100 years of war in the Reformation. It's that serious. We've changed the world that much.
So we've changed the world, but we've assumed it's on one single trajectory. And actually what surprised us, I think, is what you're saying, is that the forces of, analog forces are kind of creeping back, but also the forces of friction. Yeah. And unless we find a way to kind of balance those two forces, we won't be able to emerge successfully.
And friction is a good, don't get me wrong, like I would describe myself as a classic moderate. We're seeing a period now where politically people are becoming very polarized. You can neither have too much efficiency or too much resilience, i.e. friction. You need a balance between the two. For example, all financial transactions happen when there is imbalance. If I offer to sell you a bar of gold for $1, you will buy it. It's extremely liquid. If it reaches a perfect equilibrium, where there's a perfectly efficient pricing, then the market sees up and there is zero liquidity. You need, this need for resilience is creeping in. I'll give you an example. Like during COVID, French supermarket shelves were not empty like they were in the UK because their supply chains are less efficient than in the UK. So there was much more buffer and much more resilience. And so this buffer and this resilience is what's now creeping back in.
So basically, to conclude, sometimes it's not just about efficiency. Inefficiency has its own virtues. So thank you for that, David. That was very inspiring. And if you want to see David again, we'll be speaking at another panel later this afternoon. Thank you again.